Welcome back to another episode of the Financial Dad Podcast. Today's episode is one that is personally near and dear to my own heart, as I have a child on the way. And the conversation today is all about if you're thinking about having kids, what are the financial implications? Like, what do you need to prepare for? What do you need to have set in place if you are self-employed? Most people on a W-2 are going to have some of these things already set up for them. So if you are listening to this today, grab a pen, paper, pencil, Google Doc, maybe write some notes in your phone. But these are some really important conversations that are not only going to impact you, but obviously your future children. So where should we even start today, Dad?
Well, I think for most entrepreneurs, the number one thing is if their work relates time and money, in other words, if you take time away from work and you're going to lose money, well, you got to figure out how you're going to replace that while you are on, taking care of a new child or in the hospital or, whatever. So I think the first question is kind of a budget question for the early portion of having the child and the time leading up to that, because most people stop working a little bit before the baby comes. um how are you going to survive that period of time?
It does depend on the state because I have done a lot of research in this, prior to finding out that I was pregnant. I had gone on, webinars and tried to learn about how it works if you are self-employed. So I would also urge anyone, this is potentially state by state because there is something called FMLA, and depending
Yes.
on your state, you actually might be entitled to a little bit of compensation, but it's something to think about before even getting pregnant. I think that's the biggest thing.
Yeah.
And that's if you're the woman, and then also for the father as well. These are just things that you want to be thinking about prior.
Yes. Yeah, because the biggest thing is a gap in income. That's the number one thing that you're going to deal with financially by having a child if you're self-employed.
Right.
Um, and again, because most self-employeds aren't in a position where the income comes whether that they're working or not. That's a beautiful place to be, but that's not where most are. So if you're not in that position, then yeah, the gap in income is going to be the number one question, the number
hmm
one thing to try to plan for, fill the gap somehow, plan how to fill that gap.
I remember, I think it was 2 years ago, I actually worked with a mentor who she knew she was about to have a child, and what she actually did during that time was she reduced her take-home pay. And she actually hired someone to come in and really like operate the business for her while she was on leave. So I feel like there are creative solutions that someone could be thinking about. Obviously, that doesn't help so much in a financial way, and that means the business still needs to be, like generating revenue without you. So in her case, it was still generating revenue without her. She just really needed an operator. But in times of automation, I mean, a lot of you listening might be using some sort of technology to support, and maybe you have a Shopify store that can, fund without you actually doing that much. So there are,
Yep.
I think it's all about that like pre-planning, thinking about how will this thing run without me there? Do I need to hire someone? Do I need to, refer clients out? Like, what would it actually look like? So, yeah, it sounds like that is step one for someone, just thinking about how will this thing work when I'm away and how will I fill then this gap in income?
Yep. I mean, that's the most obvious thing I would say too. You know, the other things we can talk about are probably in declining levels of obviousness. Okay, if you can all put it that way. Because I would say the second thing, just for example, is what are the increases in costs you will see because you now have a child?
Right.
Okay. Daycare, for example, or diapers, food, doctor visits, clothing. All of these things now start to kick in because there's another life that has to be supported by the family. So you have to do some planning and look at your budget and see, okay, where am I going to be afterwards? If I'm going to, support this child, you may want to talk to friends about, hey, how much do you find it costs to have a child? what are your childcare costs? What are your, day-to-day living costs for the baby? And so that is sort of the second part of it all. And ideally, to be quite frank, ideally, you've done that exercise before you got pregnant. You sat down with your partner and said, we got to figure out if we can afford to have a child. And, is it time yet? Is it not time yet?
This is where everyone
If
can go back to our budgeting episode actually of the podcast. So we talked more about budgeting from a business perspective, but you can really take those same concepts and apply it to personal life. It's like, what are the fixed costs that are there every single month for you to live, like your rent, your mortgage, your utilities, your car, your insurance. My husband and I did do that exercise prior many years ago, which was really helpful to just see what does it cost us to live every single month, because I think then when you go toward this next step of adding someone else in who's going to cost money, you get a little bit, you understand where you are. It's just
Yeah,
it's kind of facts and figures. It's black and white in a way, which I think is helpful here.
totally, totally, because money doesn't lie. If there isn't enough money, you'll find yourself not paying down credit cards. You'll find that credit card debt getting a little higher and higher and higher. You may miss payments on insurance or on utilities or something, and all of those are bad signs financially for you going forward. So, um, if you don't think you can afford to have the child, but you're going to have the child, then you've got to look at what can we cut? What are we going to remove? Unless you can get your income up somehow. But you may need to look at what it's going to have to go for
Hmm.
us to be able to do this, if that's the decision you've made.
And maybe for some self-employed people, it'll be the little kick in the booty of, hey, I want to actually like make a lot more money so I can be a little bit more comfortable or be a little bit more prepared. And I know that's what it was like for us. We were like, okay, well, we need to be saving. We need to have a little bit more saved to just have a little bit of a cushion to be able to, self-fund basically a maternity and paternity leave in our case and feel comfortable and confident to do so. So I think that's like a
Yeah.
great step one. And I'd love for you to bring us now into some of the accounts that we might want to be opening for, a child when we have them, wills, estate planning. Bring us into those things.
Yeah. Okay. So some of the other things that are less obvious that you should start thinking about as soon as you know you're pregnant for the first time, are how am I going to one day fund the equivalent of buying a house to send a kid to college? How am I going to protect my family that in the event they lose their father or their mother, the surviving spouse and any children will still maintain their lifestyle if that is the goal of the family, that they'll still be able to live and be okay. And that's a big financial calculation as well as obviously insurance questions. And the third thing would be now that there's going to be someone other than just my spouse, where if one spouse or the other passes away, pretty much under every state law, everything just goes to the spouse, generally speaking. And usually you've set up everything to go to the spouse. We'll have a separate thing on estate planning and how all that stuff works. But once there is a child, you have to start thinking about wills and trusts. And the primary reason is that in the event both parents die, in most cases, you're going to want something called a contingency trust. You're going to want a way for all of the assets and life insurance, whatever it is that you've built up in your lives, to be managed and protected for your child or children.
Hmm.
And that is not done by leaving money to each other. That is done through trust planning. It's real estate planning.
How does this change also when you have a business, right? Because say both parties, mother and father, pass away, but you still have a business. How does that technically impact or not impact the child? And I'm going to assume if there is some sort of like succession planning in the business, then these things could be laid out. But yeah, how would that impact a self-employed person who then does have a child?
Yeah, so a self-employed person who has a business, an important part of financial planning is succession planning. What happens to this in the event of my death, disability, career change, retirement? Okay. So, in the event of death, or disability or retirement, for example, usually what you want is something called a buy-sell agreement. Buy-sell agreement. This is a legal contract, and it says something along the lines of, in the event of my death, you know, I'm party A, party B agrees to purchase from my estate or from my survivors um, my full interest in XYZ business, and here's how they're going to pay for it. Here's how much they're going to pay for it, or here's how we will figure out how much they're going to pay for it. Um, and I am obligating my family to sell this business to this person. So it's a legal agreement, but it ensures a couple of things. It ensures that the business will continue so that the employees, the customers being served, all of that can continue. It ensures that the family gets something for the value of that that's been built up by the entrepreneur, right? And it explains how much and how it will get paid. So is it going to be some percentage of revenue for a period of time? Is there going to be life insurance taken out on the founder so that if the founder dies, the buyer will come into that life insurance and use it to buy out the family? So a buy-sell agreement for an entrepreneur, I mean, this is an estate planning conversation. It's
Yeah,
probably
we'll have to record another
total,
episode about
yeah.
it.
But for an entrepreneur, that's a critical aspect of getting value to their family, continuing the business, in particular if there are customers being served and employees who have jobs, dependent upon it. And it's the responsible thing to do as a business owner,
Wow.
is to take care of that.
We will have to do another much deeper dive on that topic because I've never even heard of that, but that makes a lot of
Yeah.
sense if your company is much larger and has a lot of moving parts and people
Yep.
involved in it. So I'd love for you to give us the Spark Notes, Cliff Notes version of what is a will and what is a trust.
Okay. A will is simply a document that says, in the event of my death, I want my assets disposed of in the following way. Period. End of story. Give my coin collection to Aunt Sally and give my shoe collection to Mary. you know, like that's a will. It just, it may have things about how you want to be cremated or not, but often that kind of stuff is even in a different document. Um, a trust, think of it this way. The will is a transaction. You die, here's what happens. Boom, done. Okay. A trust is an ongoing situation. These assets are to go from my estate into a trust. Someone is to be the trustee of that money. Someone is to be the manager of that money. Here are the beneficiaries of that trust, the people who are to receive income from it. Okay. And how that's going to be determined. Um, and here's how long it can go. Can it go to my grandchildren, for example, not just my children? Um, and here are stipulations that I want to protect the money. So, if one of my kids has an addiction, for example, they might be cut out of the trust income so that they're not just getting money to use for buying something. Um, so there will, or if my kid doesn't finish college, they get no money. People will use trusts to motivate and incentivize behavior in their survivors, for the long term, for the rest of these survivors' lives. So a trust is an ongoing thing, whereas a will just says, okay, at the point of death, here's what we want to do with everything. And the will and the estate is closed at a certain point. It's just over, but the trust goes on.
This is very interesting. Do you have in your opinion, what is better for who? So a small business owner, should they be putting their business in a trust, their house in trust? Should they be putting all this in a trust? Or should they just write, in the event of my death, my business is going to my daughter, Sally Sue, to choose whether she, continues on with the business or not, my bagel shop.
That really depends on the situation. Most in Florida, for example, a lot of people put their assets during life into a trust. And you can do it in a way that you can change your mind later or not. You can do it either way. But the main reason people do that is that Florida has what's called a probate estate tax. Probate tax. So anything that goes through probate, the process of probate, is taxed. If you have money in a trust when you die, that money does not go through probate.
And probate is when you have a will.
Yes, it's when you die.
Yes.
It is the process of settling your estate. Having a will simplifies probate because you've said, my estate, everything that I have and all the debts I owe, here's how I want it all dealt with. If you don't have that, the estate is messy.
Hmm.
Every state has laws as to what family members would inherit what percentages of an estate from someone who dies what's called intestate without money.
This is a very detailed conversation, and I would like to record more episodes about each of the topics specifically, but high level here, just kind of overview of what we've talked about so far. Prior to thinking of having a child, you want to be looking at your budget, you want to be looking at your fixed and variable expenses, both within the business and for your personal life. And then you're starting to think about, okay, how am I going to fund a leave of absence? What am I going to do when I take time off a little bit before, a little bit after the child, and starting to think about some of those costs. Then you want to be looking into some of those accounts that you can be opening for the child towards college or just like a
Yep.
savings account in general. Then you
Yep.
can make your will and you write them into your will and you would say, and does that need to be, do I need to go to a lawyer for that, for them, a notary to sign it, or does that depend on the state? Like, how does that work?
Yeah, I mean, technically you can, well, first of all, no one can write a will for you without being a lawyer in any state, as far as I know. You can get your own will by several online type services around the country. But for most people, they're going to go to a lawyer to have a will drafted and any trusts. Uh, Estate planning, wills and trusts, is a specialty, just like cardiac surgery. Okay. I've seen generalist lawyers make mistakes in estate planning because it wasn't their area of expertise. So it really is better to use an estate planning attorney. However, that said, when you're first starting out in life, most generalist lawyers are going to be able to draft what's called a simple will. Simple will just leaves everything to your spouse and vice versa, and help you with beneficiary designations of things like life insurance and retirement plans, okay, to make sure that everything flows smoothly upon your death. Once you have a child, you're going to want something called a simple will with contingency trust. Typically, you're going to want that. And so that is, if my spouse is alive, I leave everything to my spouse. If my spouse is not alive, I leave it to a trust for the care of my children. And most generalists should be able to get you that far with it, I would say.
Okay, I think this is helpful for the point of this conversation today. So we kind of have some of these main things. We have the accounts. We have maybe talking to someone who does wills and estate planning. They might also help us with insurance and life insurance. Do I need to wait for the child to be born to open these accounts, or can I do it prior to their arrival?
In terms of accounts for college funding, you have to wait for their arrival because that's when you're going to get an ID number for the kid. And you typically need that to open up an account.
Okay. And what would you say is, say the company is generating slightly under $100,000 a year and I'm making $80,000 a year. How much would you recommend to put into a college account for the child on a monthly basis?
Okay, well, what you should put into a college account for the kid is for the child is unrelated to your own income. Okay. What it's related to is what is the current cost of a college that you'd like to be able to send them to, kind of like the level of college, and what is that cost likely to be in the future? and how much would you have to save between now and then at a certain rate of return to be able to pay for that at that point in the future. That's how you determine what amount of money that is. That's where spreadsheet stuff or online, calculators or financial advisors come into play because it's part of what we do is to calculate those numbers for people.
Now, without going too deep into any of these topics, is there anything high level that you'd recommend a couple or a self-employed person to be thinking about prior to having a child?
Yeah, no, I think we've really covered the key things. Funding your leave of absence, funding the new costs of a child, starting to think about saving money towards college for the child, life insurance needs for the family, and estate planning, wills and trust needs for the family. Those are really the key elements, of what changes for you when you've got a child.
And that's all she wrote. That was fantastic. I think this is really, really helpful, whether you're thinking about a child 5 years down the line or next year, I think it always comes down to just planning.
Yeah, listen, there's a saying in my field, people who fail to plan to fail.
I have heard that before.
So I mean, I literally heard that for the first time 40 years ago, and it still applies today. Yeah, you need to plan. You need to look forward, get help from someone if you're not sure how to do it yourself. But the families that do best financially, that where their kids accomplish and get to experience the best of life that they can offer them are ones that plan. They don't, you're not random, haphazard running through life hoping you're getting it right, you
Yep.
know?
And that's why we're glad that everyone's listening to this podcast. Because even though you're self-employed, it does not mean that you have to have no financial literacy at all. And that is why you're here listening. And if you're enjoying these episodes, please let us know. Leave us a rating, leave us a review, call in with a question, send us a note on Instagram about things that you'd like us to talk about because we are an open book here and we have an incredible source of wisdom answering all of our questions. So thank you so much, Dad, for another great episode. And thank you to everyone for listening today.
Thank you, Bridget.